Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Tuesday, we took a total of 3 trades, 3 winners, for a total absolute return of $2,391 or 1.21% in our 1% risk model portfolio, where we are risking no more than 1% per trade. Played both directions, long puts, long calls, decent returns, 49%, 44%. We picked the turning points, all turning points. However, undercapitalized, should have been more patient. These could have been very big winners. Nonetheless, green is green. On the session, SPX traded and closed lower to 75.03, down 0.45%. Growth underperformed, which capped upside and pressure downside. Technology down 2.4%. Semis down 4%. Mags flat on the session. On the SPX chart, the 5-minute trend was down with the 20 EMA in green below the 40 EMA in red. We broke the 75.25 risk pivot and saw a quick move down into 7,500. The big balanced gamma strike exceeded that, moving into the implied low of 74.84. On a break of that transitional level, volatility caught a bid, which is quite typical. Peaked at 16.5, 16.7, and crushed. SPX put in a low, a higher low, and that vol crush fueled a squeeze rally in the SPX. We based for about 2 hours before breaking down in the late afternoon. We had a very tight 10-point range here, 75.20 max call on the upside and about 75.10 on the downside. Now, this was catalyst driven, fresh US-Iran tensions, and that sparked a sharp move down and a rebid in volatility, settling at the 7,500 gamma strike, which was our base case. I threw out this idea early in the morning, so a butterfly at 7,500 as a cheap way to play downside, and then again here. Unfortunately, myself, I didn't buy it. I was focusing on the singles, but if you did, back-to-back pins. For today in the pre-market, all US major equity indices are trading lower, volatility higher, fear gripping the market amid intensified conflict in the Middle East. However, SPX trading off the lows, bouncing off the big 74.30 gamma and technical level, volatility peaking off the big 19 level, the long run pivot, and a point where volatility sellers have been very active. Vol crush, fueling that squeeze rally higher in the SPX. In terms of resistance levels on the upside, bulls need to reclaim the previous session's low, which is 74.78. So a break of the low is a continuation signal, which we're seeing here in the pre-market. So this would be potential resistance, followed by the transitional zone here, 74.95, 74.97, and then the big balanced gamma strike at 7,500, gap fill 75.03. So potential target, but this is going to require essentially a 180. There is also going to be some levels in around here, 0 gamma 74.60, G7 74.50, but major support on the downside, 74.30, SPY put wall 74.27, and then another gamma level at 74.25. So it's a 5-point zone. Implied lows also in there as well. In the event of a break, it does open the door to 7400, which is the biggest gamma strike. In regards to this 74.30 level, if you've been trading SPX for the past few weeks, you know this has been a key level. Zooming back here, it was once resistance. We traded for about a week in a high volatility chop range. 74.30 resistance. We broke out. We saw the nice back test just a couple sessions ago, squeeze higher, and now we're retesting it again here. So this would be a key pivot point. A break below would most certainly be bearish. Additionally here, being below the transitional zone, flip levels, dealers will be chasing delta, selling weakness, buying strength. So we do anticipate elevated volatility, potential for those feedback loops, and VIX remains key. So levels in regards to the VIX, let's just start from the bottom here, 15.5, 16, 16.5, 16.7. This was the peak in yesterday's session. So if we do get a hard vol contraction, a 180 in the SPX, that would be potential downside target. 17, 17.2. 17.7, 18, kind of less significant levels, but major level on the upside is that 19 handle, again, which has been for several months, followed by the big 20 strike. Transitioning to our dashboard, SPX is trading below the 74.95 flip. That is our transitional level. Above, all strikes are positive. That is supportive for the market price. Below, all strikes are negative. That is destabilizing for the market price. Major support on the downside, 74.30, 74.25. Implied low today, 74.28. That is a 1% implied move. Also in this zone is the SPY put wall at 740. Again, that is SPX 74.27 equivalent. Now, in the event we do break that zone, it opens the door to 7,400. Very big gamma strike on the downside. Technically not the put wall. That remains 7,300, but the variance between the two is very minimal. On the calendar today, FOMC minutes due out at 2 o'clock. Historically a miss in terms of sparking volatility, but may receive greater attention today following the recent hawkish pivot and the ongoing pressure in the bond market. To that note, Treasury auctions also have the potential to drive volatility, particularly the shorter dated auctions, with the 10-year auction at 1 p.m. today. Geopolitics is also back in focus, leaving the market exposed to headline risk. Best to keep that newsfeed up, remain vigilant, and be ready for momentum opportunities.